after last week's conversation, I thought I'd like to move it on because literally the day after we talked last week around market conditions and other things, FX related, we saw an absolute blowout of the fix, the 40 fix, where euro dollar jumped 70 points in 10 minutes before, and I think it was 40 points 70 before and 30 points during the window, or the other way around. And I kind of raised a debate quite a high level on LinkedIn, I have to say, around how can this be best execution, and are people really understanding the cost of their trading? How can they be when it's 70 points? So what I wanted to do was in part revisit some of your work around this, just to kind of maybe reset the agenda and get your thoughts on how people can measure execution quality has changed over the last couple of years.
Yeah. Actually, I thought your debate was an interesting one. I like the fact that Andy Mack took you on LinkedIn.
Yeah.
He did say great article and then proceeded to disagree with you. So, I'm a bigger fan of his than I was already. I think his point was, look, there's a match of supply and demand. And on that occasion you picked out, Eurodollar did rally and stayed well above the fixed level for the next 5 hours. So I thought that was a valid point.
Yeah, as did I.
Sure. I mean, so on some of the every day at 4 o'clock, you seem to see this. What do they say? Up the escalators, down the stairs. You sort of this activity, which doesn't seem normal or right, and perhaps there might be smarter ways of executing those large orders. I think the month-end fix, there was obviously a real weight of trade around that, and things tended to stay higher for a while.
My point was very much that if you'd have actually done the fix over 20 or 30 minutes, you wouldn't have had a market impact.
Sure.
Let's get to your thoughts then around execution. If you're talking to a trader out there now, what should they be looking at?
Well, look, I think we distilled it into it's a pretty lengthy white paper 3 years ago now, but we distilled it into 5 factors. Of course, you've got fill ratio. Everyone looks at that. Price variation. This is very key, particularly if you're comparing last look to firm liquidity, because on central limit order books, you get price improvement. So what do you do with that price improvement? So the price variation, everyone talks about slippage, but no one talks enough perhaps about the price improvement. Of course, bid offer spread, it's the golden child, it would appear, when people are making their selections. I think sometimes perhaps erroneous selections. Then, of course, you've got the hold time. Of course, again, with firm liquidity, there's no hold time. And I think the big thing about hold time is just that opportunity cost. Is everyone aware of that opportunity cost, which they're paying away effectively? And then the last bit is market impact. Now, there's no such thing as, in my opinion, as perfect market impact, unless, of course, you've just got the softest flow in the world and effectively are paying your liquidity providers. But there's those 5 key factors that everyone must measure. And generally, what I see out there is people aren't measuring them. They're certainly not measuring 2 or 3 of them, which means they can't really evaluate their true cost of trading. Now, again, when you move into the asset manager and real money world, they are tasked with best execution under MiFID. And there are 7 factors they consider in best execution. So it's not always about the best price, but you have to look at time of day, you have to look at size, you have to look at market impact, the likelihood of execution, all of those good things. But in order to tick those 7 boxes for best execution, you must measure those 5 key metrics I've already mentioned.
So what ones do you think people are underutilizing of those 5?
Well, I think for me, it's the opportunity cost. So let's dive straight into hold time. I mean, in this day and age, where you have, certainly on the LMAX exchange, you have firm streamed limit orders, every tick, every move. So I don't know why you're waiting for these snapshots from legacy venues that are every 5 milliseconds. If you're lucky enough to get access to that feed, or if you're not lucky enough, you have to wait 20 milliseconds. And for liquidity providers, last look hold times, I still gather can be 20, 30, 50, 100 milliseconds. So that's a huge opportunity. So at the end of the day, if you have 100% fill rate, the hold time's irrelevant. But very few people have 100% fill rate.
Yeah.
So that's information you're giving away. So let's look at that. Make sure all your liquidity providers are held to the same mark, right? So if 10 milliseconds is your time frame, well, okay, that's your response time. In my opinion, it should be as close to zero as possible. And then you can look at price improvement, which you do get naturally on any central limit order book. But most asset managers, most traders don't really care about that price improvement. They send you a limit order. If they send you that limit order at on last look, for example, the market's trading 2.5, happy to pay 5. If the market's 4, that's irrelevant. You've filled at 5. On central limit order books, you've filled at 4. Now that is real value. I'd suggest you use that price improvement, which you don't get in many places. You certainly never get or rarely get with last look. You use that to increase your fill rate. Because what's very important certainly on the real money side is your certainty of execution. So the higher you can push your fill rate, and the more you can utilize that price improvement, the better your fills are going to be. And just jumping back into the hold time again, you think about it. When we first did this, there was all this chat around pre-trade hedging, or as I like to call it, front running. Mostly that's been eradicated, and congratulations to everyone involved in the code for that. Mostly it's been eradicated. But you can't eradicate it if there's a huge swathe of orders coming around. So if you've got to buy, whatever, a yard of euros, 5 yards of euro, whatever the number is over a day, over an hour, your liquidity provider sees that. You don't put a 5-yard order in, a 1-yard order in, or even a $100 million order in. You do that in clips of 5, 10, 20. Now, look, if I'm a liquidity provider and I see that coming in, of course I'm going to start trading ahead of your next order. I think that's market information. I don't have to see your order. It's not typically pre-trade hedging. I'm not using information related to that specific order. So I adhere to the code, but certainly I'm using it. So the whole time you're giving information away, because I fill the first order, I fill the second order, I'm holding the third, fourth, fifth order for 100 milliseconds. Guess what? The market is spewing that back out to other venues, to other LPs. So your advantage is gone.
And there's also the issue around, around transparency of a club, isn't there? We're trying to execute large tickets.
Sure, but what do you mean by that? I mean, it's what you get, right?
As it is, I guess what I'm saying is if you deal with one or a very small number of LPs, then you can keep the order quiet for longer than you can if you're trading on a public market. I
think those days are gone. Sure. Okay. If you want to go back to the point, if you want to trade with one LP, fine. You might struggle to tick your best X boxes, but hit one LP, two LPs, three LPs, assume they do nothing. But at some stage, risk books are not the size that they were back in your day, or even when I was around there. It's very few people are internalizing flow of that scale. So at some stage, they're going to externalize. And so there's many ways to do it, even in public order books. So, you can have iceberg orders. Most people are using that. Everyone's using VWAP, TWAP. There's many different flavors of algo out there. Although I'm reliably informed there's really two types of algo, fast ones and slow ones. So it depends what your what market impact you're looking for, and how quickly you want to get done. So I don't think you can execute fairly, tick all the boxes, keep all your stakeholders happy, and achieve the best result for your trading by getting a limited number of LPs. I really think you need to have as much liquidity as possible in your stack, but going back to it, make it uniform. Obviously, I prefer that you trade it only on firm liquidity or streamed limit order liquidity, but I am aware there's this other thing called last look out there, but make sure it's uniform. Otherwise, you just get writing options again and again and again to the liquidity provider who has longer hold times.
because I do think the last look issue has kind of been raised again in this current pandemic, because we're getting a lot of people saying to me that actually, well, my hold times have gone out.
Yeah.
As people are trying to. I think the worrying thing is that the anecdotal evidence is that the customers aren't really caring.
Yeah.
Is this the next stage of what we've got to do around understanding the true cost of trading? Actually, really get that message home to people that these rejects and this hold time is actually costing you money.
Yeah, I think the smart guys realize it. I mean, certainly going back to Andy again, the biggest shops out there, the biggest real money guys, asset managers are well aware of it. But there's a long tail of shops that may not have the resource to invest in TCA metrics or post-trade analysis. So I think they are aware of it. There's a few simple things you can do, like everyone knows what the price of euro is. Okay, it's harder in the tail currencies, if you like, but everyone knows what the price of euro is. If you don't know it now, you certainly know it in 5 milliseconds. So I just argue that if you see a mass update, so if you have 3 firm limit order venues, of which the LMAX Group running all our exchanges is one, and the 2 other legacy venues, if you have that in your stack, then every price has been updated at least within 5 milliseconds. So if you like, give it 2 updates, right? 10 milliseconds, you're covered. I don't know why anyone has to hold an order for longer than that. So I think that's the starting point. And if you are being held for longer than that, it is costing you money. And it's quite easy to do the analysis. I mean, send me your trades. I can do the analysis. I'll show you where it traded. And it's okay if you get filled. Remember, if you got filled at your limit, that's okay. But if you're not getting filled, and I don't know many people out there that are getting 100% fill rates, then you have to quantify it.
Yeah. When it comes to this issue of data, now we've touched on this before when you and I have been chatting, maybe mainly for our video interviews, but maybe for this platform. How important is the data, and what are you going to do to sort of build your presence in the data industry?
Well, look, I think in the world around us, not just in foreign exchange, data is key. And in fact, if you look at all the massive exchange deals that are being done, they are clearly market data plays. In the internet, content is king. In capital markets, data is king. So for those exchanges, it's a great business model. It's recurring revenues rather than the sporadic execution revenues. So that's key. It's much easier for everyone to handle big data now. In the old days, it was hard to access the real price of foreign exchange, right? Not everyone could do it. Maybe only the top 10, 20 banks knew what it was. So it's much easier to consume it. It's quite expensive. But I would say a lot of the foreign exchange data out there is irrelevant. I mean, if you're taking last look feeds in and saying this is relevant price discovery, it just isn't, right? Because it's not tradable. There are 3 sources of tradable spot liquidity, right? At LMAX Group, I have 5 exchanges. All of the prices on those 5 exchanges are tradable. And as I say, there are a couple of, you like to call them primary venues, I call them legacy venues out there that have tradable liquidity. So that's real. So what I have to do is make LMAX Exchange more relevant in everyone's stack. Of course, I've got to increase my volumes, but I would say to everyone right now that if you want a true indication of where the market is, you need me in the stack. So I need to distribute that. It's an obvious growth area for me. Within the group, currently my market data revenues represent 4% of my revenues. All the largest exchanges down in Chicago, for example, you're talking 15 to 20%. The LSE deal just done, market data represents 40% of their revenues. It's key. It must be accessible. Guys like me, companies like LMAX Group must distribute it further afield.
confident that you have managed to sort of hit or handbrake through that threshold in terms of ADV where your data is now valuable, is now that must-have?
We're close. I'm loath to say that we've cracked it because we haven't. Until we're number one, we haven't cracked it. So, but certainly when you saw the crazy month of volatility in March, everyone had a good month, but I outperformed all my peers in terms of quarter-on-quarter growth, etc. And for the first time ever, and you wouldn't believe this, a very large investment bank spoke to me at the start of the year and said, David, you need to charge more for your market data. Now remember, this evolution is 10 years. So 10 years ago, market data on any of the LMAX exchanges was free because it wasn't that relevant. It became very relevant. I won't quote the names to you, but some of those asset managers are telling me now around the fixes, the hourly ones rather than just WMR, I'm 10% or 15% of their flow at those times of day. So that means we're relevant. And I started plugged into more and more bank desks. So yes, one of the banks actually suggested that I increased my rate for market data so that only the key participants could have it. So I think we're close. Look, it's an evolution until everyone's plugged in, until I have every bank algo plugged in, until I have more asset managers saying, please put LMAX in my stack, then we haven't cracked it. But we're close, I'd say, to being very relevant to everyone.
I can just envisage you with your arm right up your back as someone said, please charge more for your data.
To be honest, though, when you circulate that back around and you discover they're the only ones that agree to it, then you have somewhat of a problem.
Marketing 101. David, we're gonna leave it there, unfortunately, because we're going to bump into the next session. 20 minutes is up, but we're going to move this onto the chat because there's a couple of areas I'd like to maybe get into a bit more depth with you. And if there's any attendees here want to ask David a question, please just pop it in the chat and we'll go from there. So for now, on video at least, thanks for being with us.
Thank you, Sean.